Buzzacott's second Family Office Services Roundtable focused exclusively on private wealth for the African market. Our selected group of expert advisors, all with personal and business ties to Africa, were brought together to discuss the latest considerations for wealthy African families. We started off by showing trends emerging in the region and the impact of COVID-19, including the change in relocations for international families. This led us into the importance of raising awareness when it comes to structures and worldwide tax planning, and how appetite to invest in the UK property market has changed over time. To finish, we consider the trends we expect to see going forwards and our thoughts on the market for the future. Watch the full recording now and be sure to get in touch for more information on how these factors may impact you and the opportunities available. Good morning everyone, and thank you for participating in the next Family Office Service Roundtable regarding the African clients that we work with. Firstly, let me give you all an opportunity to introduce yourself. I'll start with the home team. Akin Koka, would you like to start off?
Thank you, Rakesh, and good morning, everyone. Well, my name is Akin Koka, and I head up the private client team here at Buzzacott. Just to whiz through my whole life in a few minutes. I was actually born in the UK, but born to Nigerian parents. And my first trip to Nigeria, went to live in Nigeria when I was 9, stayed in Nigeria throughout my secondary and university education, and then came back to the UK. So I qualified with a mid-tier firm, and for just over 30 years or so, I've been working in the private client world for my sins. And I suppose working in the city for most of those years, most of the work has involved families with some sort of international connection. And it's always been of particular interest to me because I'm a non-dom as well. So all of the sort of ideas and planning around non-doms and people with assets in multiple jurisdictions is appealing to me. I just now need to go out and get those assets in all of those jurisdictions so that I have a reason to do the planning. But that's me in a few minutes.
Mo, would you like to go next?
Yes, certainly. Thanks very much, Rakesh, and thank you to Akin as well. So my name is Mo Bellucci. I work in client origination and business development. I work for Standard Bank in Jersey. I also represent the Melville Douglas business, which is the boutique asset management arm of Standard Bank. Standard Bank's history in Africa goes back a significant amount of time, back to 1843. And in terms of my career, I've been working in finance for around 20 years. Prior to this, I was with a company called Quilter Cheviot, which was part of the old Mutual Group. I have some other background in Africa. My wife's from Tanzania, so I lived in Dar es Salaam for a year when we got married at the turn of the millennium. I have 3 children, and so my links to Africa are both from a career and a personal perspective.
Sailesh, would you like to go next?
Thank you, Rakesh and Akin, and to Buzzacott for arranging this conversation. My name is Sailesh Navsaria. I'm based in Jersey with a business called JTC Group. We are an international fiduciary business with offices across 23 different jurisdictions. I myself was born in Africa. I was born in Uganda, and my brief in our business is all things to do with Africa in terms of private client work, corporate work, and funds work. The money coming into Africa, going out of Africa, or these days increasingly staying within the region. And it's a region our business has been covering for well over 30 years, and I continue to travel there regularly.
Thank you, Sailesh. Bimpe, would you like to go next?
Yes, hello everyone. Thank you again to Buzzacott and to Rakesh for inviting me on board this roundtable. My name is Bimpe Konchu. I am first and foremost a lawyer. I trained as a lawyer in Nigeria and in the UK, so I'm dually qualified. I qualified as a barrister and solicitor in Nigeria in 1987. and qualified as a solicitor in the UK in 1997, and I then pivoted to the bar. So I'm a practicing barrister. I became a barrister in 2014. So I've spent most of my life pretty much applying law to problem solving. And in that space, I refer to private client work that I've been doing probably for the last 20 odd years. When I moved to the UK in 95, I set up, from Nigeria, I set up a firm of solicitors, which is very much a niche practice focused on, I would say the whole doing business in Africa was coming up to be an interesting sort of dynamic between the UK and the rest of the world and Africa. So I felt myself well positioned to be that gatekeeper. But eventually found myself really doing more for family-owned businesses on the continent, looking at everything from their governance to their strategy, how their wealth was being sort of looked after and managed. Of course, surplus wealth leaving the continent comes to the UK. And so I found myself quickly retraining as a trust and estate practitioner through STEP. And since then, I've really been focused on the private wealth space. The firm of solicitors I ran, we wound it up in 2013 for various reasons, but I then decided to develop a multi-family office platform, which is what I run today, called W8 Advisory. And really, again, it's very much focused on the African entrepreneur and African sort of family owners of businesses, and in helping them look at succession planning, legal, tax, international wealth structuring issues. And that's where I firmly am. And this is, I would say, my third career, and I'm enjoying it very much.
Thank you, Bimpe. Thank you for all the kind introductions. Let's get some debate going with some questions. Let's open it up. The African private client market has grown over the last decade, and I know that certainly the Western world is now focusing on the African as a client sector. There's greater complexities in affairs as time goes on, as they look from moving from their local jurisdictions in Africa to international jurisdictions around the world, and with people moving around the world. What trends have we seen emerging, and how, as professionals, are we adapting to their needs? Maybe I could start with Mo first.
Yeah, well, thanks very much, Rakesh. In terms of, if we reflect over the last couple of decades, there have been a number of key drivers of growth in Africa. So three main trends have been creating a confluence, which is Chinese investment, the advent of globalization, and technology. They've all combined with the entrepreneurial nature of the African people. And these really turbocharged the economic growth in Africa. I mean, I can visualize in Dar es Salaam 20 years ago, living there. The changes that have taken place over the last couple of decades have just been incredible. I traveled there last year on business. The malls, the buildings, the infrastructure, the access to consumer discretionary goods has just been absolutely incredible over that period of time. I think there's also the ease of travel and recognition by new practitioners of the growth potential in Africa has meant them traveling more. It's provided access to more sophisticated wealth planning tools and concepts which were previously limited to certain communities there. And I think with tech, we always have now if we look at the client space, we have the on-demand, always-on culture. So expectations and demands are higher. People having to jump on a plane at short notice to see one family is a normal occurrence. And just a couple of other things in terms of trends. I mean, sustainability, so building back better, and philanthropy, so giving back to one's community, are at the top of the next generational trend cycle.
Thank you, Mo. It's interesting when you talk about the tech sector. We've seen a lot of clients come in there, develop tech abilities within banking over in Africa, and the banking model in Africa has certainly developed over the last 10 years. And in some instances, in terms of mobile banking, they've been far ahead of most of the other countries around the world. Are you seeing similar things, Salish, in Africa as well, in terms of the banking side and the sophistication in setting up structures?
Yes, no, thank you, Rakesh. But in Africa, you see, if you look at M-Pesa, which came from nothing, it was a startup in a way, funded. And if you look at, I travel across the region, okay, and we cover North Africa. You go to places like Egypt and Cairo. We go to South Africa. You got Kenya, and as well as you got Lagos on the west, and we cover all of that market. And in each one, the growth sector is in there are, but also in the startup communities that are growing in these regions. And these are young, dynamic businesses, entrepreneurs, and you will see some of the world's great companies come out of these communities. And what they're doing is serving the market, making it easier to access certain types of services, whether it's fintech, whether it involves meditech, whether it involves agri-tech. But Africa is a hub and hive of that activity. And it's no surprise that in many of the financial products, that it's leading the way into for others to follow and build upon. So, I mean, for me, it's a continent. It's young, but it's also vibrant, and it's the entrepreneurship is now starting to show. And tech is, as Mo rightly says, tech is a big driver. Accessibility to that is a big driver for growth for the region.
So are we also then concerned about, obviously there's a lot of wealth being generated in Africa and built through Africa. There's obviously still some element of political risk there, and economic risk as well. And we've seen a lot of people moving around the country. I know certainly all the participants on this call spend a lot of time traveling to Africa. Akin, you go down to Africa, 2-3 times a year, meet down people in Nigeria and Lagos, and get quite a lot of referrals. And then when we look at some of the structure, has your travel restrictions over the last year caused you an issue in terms of communicating with clients? And also, has it lessened the opportunities, or has it increased the opportunities? What's your view on that?
Well, that's an interesting question, Rakesh, and the answer's got to be yes and no. So first of all, if you sort of start with the traditional trips that I would make, usually 3 times a year, early part of the year, sometime in the middle, and then towards the end of the year, that has been affected by COVID. Just all of the hassle around testing and all of the uncertainty has meant that I've just put it on hold this year. But I've seen that also in terms of the number of people that I would normally have seen and met with coming over to the UK from parts of Africa, Nigeria mainly as well. So that side of things, I think, has certainly been affected by COVID. I've seen lots of families push back plans as they, decide to sort of suck and see and just see how things play out. But on the other side of that, and probably where we've seen a lot more activity, is around areas like, for example, the sort of accidental UK tax residents. So we've had to do a fair amount of work around people who have found themselves stuck in the UK, obviously for a lot longer period than they'd hoped. And you may know that the sort of rules around the number of days that you can discount for COVID, there aren't really that many days. And so we're seeing a lot of people who, particularly if you've been in and out of the UK over a period of time, or maybe you were resident in the UK at some point, finding that they're having to make alternative plans because they are resident in the UK. We've done some work around, where some people are very close to the edge now and will have to really monitor their days. So that area of work really has picked up, although the sort of new ventures, people looking to invest in the UK, that inquiries along those lines has slowed down a bit since COVID.
Absolutely. I mean, it's been manic, to be honest, since COVID started. I guess lockdown came in March. It was initially a bit quiet for like 4 weeks, but suddenly I found that clients I had been traveling out to see, and I just like Akin, I do visit West Africa and Nigeria, particularly probably 4 or 5 times a year. So between January and March, I'd been 3 times already. And, typical rate of conversion, getting to a client to understand the need for some structuring, looking at governance in the family business, succession. It's always a nice conversation to have. And they're like, well, I'm so busy now. I've got to go to China, from there to, to Dubai and XYZ. And suddenly clients were sat at home reflecting on all of this, and my phone didn't stop ringing. And I think it's also, unfortunately, COVID has brought home the mere factor of our mortality. No matter how wealthy you are, you suddenly realize that you could be struck down any minute, because I've had clients who have called me very shaken because somebody very close to them, who they thought was invincible, has been struck down by COVID, either died or almost died. And they suddenly realize that their affairs are in a mess and really need to be looked at. And the structuring we talked about last year or the year before, which they said, yeah, I'll get round to it. Suddenly they felt, if I don't do it now, I might get COVID tomorrow morning and, not be able to sign the paperwork. So yes, I mean, COVID has brought that home. But in a way, as a trusted advisor, which is what I've sort of, I hope hold myself out to be to clients, and giving as much independent advice as possible. I've become that coach, that mentor, and I've had clients call me at all times of the day, wanting to just talk through a structure or review a structure, and wanting it done yesterday. So that's been an eye opener, and that's the world of private wealth. I guess it's very personal to the client.
So in the tune of that, then obviously we've seen a dramatic increase in trust structures being looked at from succession planning, wealth planning, particularly in relation to African companies as well as assets outside of Africa. Sailesh, have you seen a sort of a trend towards more private trust companies? We've seen them looking at holding from personal assets segregated away from their business assets. We've always had the issue with the African clients, that, in the same with Asian and Indian clients, is that they don't want to relinquish control or legal ownership, and the PCC does help that and help them run their independent companies in Africa. But I think the understanding of how PCCs operate and the value that it does bring isn't quite well known in the African market. But every time I sort of bring it up, saying this is different structure to a trust structure, certainly, but it still lets you retain an element of being able to run your business. Are you seeing similar sort of conversations with your clients?
Yeah, very much so. It's along the same lines that also Bimpe is sort of implying. I mean, continuity has come to the forefront of everyone's mind, whether it's us at a personal level, professional level, at business level. So I think that is, that subject's ingrained in people. And the questions we're now getting is, the territories we all cover, clients are used to controls. So how do you balance that with a independent trustee sitting somewhere in Jersey or in Switzerland, and their understanding of how a family ticks? But I think the key is that a lot of our families are now international. We've got family members living in US. We've got Europe, of course. It's a big hub for the Africa diaspora, if you like, as well as so it brings with it lots of different issues and challenges in terms of planning. Some structures may work, some structures may require sort of fine tuning according to how that beneficial interest is catered for in the different countries. But I think private trust companies are increasingly popular. I think things such as foundations are coming into play because, again, the families feel more involved with the structure. It's not an alien structure where it's, using somebody's discretion and somebody sitting in Jersey or Switzerland using their discretion on your family affairs. I think people want to take a lot more controls over the way they want their structures happening. And a private trust company actually is quite complementary. And often we get there's a trust, there's a foundation, and a private trust company has a holding vehicle. And often it's a blend of the three aspects to it, which actually suit many of the family members. But the work that Bimpe is also doing in terms of family governance and so forth all comes into play once you get that kind of private trust company structure for families. But they're complicated. You have to make sure that they're managed and controlled in the right way. Decision making can be open to challenges, so it needs to be very delicately sort of managed in the right sort of jurisdictions as well. But yeah, I think families are thinking much more broadly about the way they want to plan for the future.
I think what Bimpe said earlier on about the succession planning and talking about the PTC, one thing the African clients haven't necessarily looked at, they thought they live forever. COVID has kind of given a reality check on that. So we've got a period at the moment where people are focused and understanding that they have to do something. But on the positive aspect, historically we've seen quite a lot of people come to the UK for education, and that poses challenges as well. And sometimes, the parents come along with them and become unwittingly a UK resident. Akin, we've seen a few cases like that, haven't we?
This is obviously something I can really identify with, in the sense that my father came to the UK for education. He came here to study, finished his studies, stayed, hence the fact that I was born here and until I eventually moved back to Nigeria. So not only have we seen this trend of many Africans coming to the UK or going to the US for study, but also we've seen a trend for them to have children in these countries, so that you have these mixed families. As I see the world as shrinking. The world is becoming a smaller place, and so you have these international families with children born in the UK, born in the US, and all of this sort of is creating a different dynamic when it comes to planning. Now, just looking at my own family, the traditional African family, I can say that the whole issue of succession, and I think Bimpe touched on it, is very delicate in an African culture. And I just know from the attempted discussions with my late father and how far we managed to get having those sort of conversations. But having said that, I think it's a difficult discussion anywhere. But in the African context, I think maybe more so. But what COVID really has done is I think it's changed the way it's a sort of global phenomenon, and it's changed the way the whole world thinks about succession. And of course, in this ever shrinking world, Africa is part of that story as well. And so we are having to do far more work in this area at an earlier stage than that would have been contemplated in the past, where people are starting to think about succession, what it means to maybe start to move down parts of family businesses to other members of the family. Sometimes this can be particularly tricky, and with clients born in the US, there's more of a natural trigger, because most advisors know if you present a US passport for due diligence, that sort of sends warning lights flashing not to do anything without some proper US UK tax advice. And we have a separate private client team that are all dual qualified that handle that. But for the UK, probably not so obvious, but there really is a need to put in place proper planning for those sort of families as well.
Thank you, Akin. Mo, you've got a company, Mauritius, that does trust services as well, does administration for Jersey as well. Are you still seeing an inflow of investment into Africa?
Yes, we certainly are. I mean, just in relation to education, that was a very good point as well. I mean, we see a sort of natural right of children from African families to get the best education abroad. And again, in terms of where they travel, it's the UK, USA, France, etc. We've seen a lot of activity in terms of Mauritius and the fiduciary structures. And going back to the private trust companies you mentioned, the control and flexibility of those is of paramount importance. But these days, again, the days of structuring solely being tax driven are now gone. Asset protections, succession planning, confidentiality are equally as important, if not more. So we do see that as well. And also the days of historically it's been the patriarch who's built the family business, but now we're seeing, again, females coming to the fore in terms of decision making for the family. So that's, again, a big important part of things.
But we still see some structures at the moment. The issue we've had, certainly I still see cases at the moment, is the advice that's been given to African clients is sometimes quite primitive in terms of the way they set things up. I mean, me and Bimpe have been working on a couple of cases, and we've still seen structures being set up using offshore companies to hold UK residential property, which they are actually living in, or members of the family are living in. So there's a misconception out there that using an offshore company or some of these structures are effective. And I think it's a duty of us to educate part of this client base to show that the structure can be done and can be done quite tax efficiently, and from a cost perspective. But we still see some horror shows. I mean, this structure was just only set up in November 2019. So with good tax advice, don't understand the legislation. The problem we have is particularly, it's the same in the Indian community. People hear by word of mouth and go, well, I've got an offshore company. I'll do it through an offshore company, but don't necessarily understand whether that's the right structure. And when we're looking at investing into UK residential property market at the moment, there's a whole load of questions we need to think about: who's occupying it, what's the value of it, how long are they looking to keep it. There's so many factors that you need to put into play before you can make a decision on what's the right structure. And we're still seeing wrong or inappropriate structures being put in place. Bimpe, are you still seeing cases coming through?
Absolutely, I am, and it's unfortunate. And I have to say, this is my main motivation for really pivoting firmly into the private wealth management space, because I found as a solicitor, yes, I would handle the conveyancing, and I'd ask questions about the structure, and I'd then say to them, listen, have you thought about the tax planning around this? And I found I was going almost far beyond just the brief as a solicitor handling a conveyancing transaction. Now, in the family office space, what I try to do with the clients is make them realize that buying the property, and especially when you're using a structure, is not just, it's not static, especially in the UK or in the US. The tax regime changes. And, if you have a proper sort of wealth manager or advisor along with you, then that person, like me, would be able to sort of explain to you the impact of some of the decisions you're making and the ramifications of what it will do to your tax exposure, or if any of your children are US tax passport holders. And so we're seeing old-fashioned structures still being used, partly because, like Rakesh just said, by word of mouth. The gentleman says, but my friend bought his property 5 years ago using an offshore company, and he told me he didn't need inheritance because of inheritance tax savings. And I'm saying, yes, that was 5 years ago. And so even that friend of yours hopefully needs to update his information, because, and Rakesh, we found even clients who bought property 5-6 years ago who have not heard of ATED at all. And I sometimes realize this, the banks will lend the money on the property, the conveyancing solicitor will do the conveyancing, and the gentleman who owns the property, the family owns it, thinks everything is static. And they need to realize that in developed countries, especially tax regimes evolve. And so the structures you're using sometimes become either irrelevant or even expensive, just as we've seen in those who are using offshore structures. And so, yes, and that's almost another reason of why I felt I wanted to be in a space where I could guide clients independently and let them understand all the different moving parts of buying property or doing any business outside of their home country. And also, to be honest with you, even in Nigeria, the tax regime has changed. And I'm trying to explain to clients that if you're not tax compliant in your country, usually these days with the KYC and CDD that the banks internationally want to do, they want to make sure that you're tax compliant. Because if you're bringing funds to invest in another country which you've not paid tax, then maybe those funds are questionable as well from an anti-money laundering point of view. So yes, I think that the tax review worldwide is something that clients need, especially wealthy families need continuous support and advice.
I think that's even more important now, where they've got international assets, particularly with the US and the penalties and regimes that you have in the US and in the UK. Doing something wrong could cause you a major problem for either your successors or yourself down the road. It's important when you look at multi-jurisdiction to make sure that all those areas are covered. And the important thing, like when basically speaks to her clients, is the awareness. And some people aren't even aware of these things. They said, we've had a case where let's use a company to avoid the IHT charge. Well, that changed in 2017. You can't use those structures anymore. And we're still seeing them coming through. So it's good that Bimpe, that you're working with clients and being that independent factor who hasn't got any sort of angle to look at it from terms of the structuring and the cost of doing the structuring. It's more doing it as an independent advisor, saying this is the best thing that you should be doing. Bear in mind your personal circumstances. And it's not an off-the-shelf company or trust structure. It's one that's tailored. And I think the important thing, and Senesh, I'll let you come in a minute, is the important thing is the tailoring of it and make sure there is a plan and the letter of wishes, which is also very critical. And most clients don't even know they can do a letter of wishes, which sets out what you want to do beyond your lifetime. So even if you die, your children will know what you want to do from a patriarchal point of view. Do you want to come in there?
No, thank you. I mean, I'd share Bimpe's sentiments as well. I think a lot of families have set up structures. There are legacy structures. Many years ago, many communities have set these up, but they've never reviewed them. They've become outdated. The beneficiaries are now quite dispersed in different, almost tax-sensitive jurisdictions. Distributions, at the time of distributions, these issues come out the woodwork in terms of tax advice and so forth. I think the global reporting, with common reporting standards, requirements around economic substance, all of these really require sort of more holistic sort of advisory. So it's quite complementary in terms of, I think every single structure we now have would have a tax eye running over it on a regular basis. So you must do tax health checks and so forth. Rakesh and Anna Buzzacott's, of course, you're well sort of catered because you've got good bandwidth in terms of different regions that you cover for your advisory work. But what we find is that some of the structures are getting dated. They're getting expensive. They don't work because what you set up 25 years ago, things have changed. We know that tax laws authorities will get more aggressive in terms of assessment of the structures. They'll have more information to draw upon in their home countries through the global reporting protocols. So I think it's never been more important to have sort of good quality advice. You also be dealing in good quality jurisdictions, because traditionally I know our Africa clients have set up, not just African clients, but there are other regions where people look at price, for example, and cheap and cheerful, it served the purpose. But there could be a case where, for example, if you're buying commercial property in the UK, that the bank may not lend to a particular jurisdiction, company from a particular jurisdiction, and you need to have more robust structures in place in jurisdictions which are, if you like, your counterparties are more comfortable with, the quality of its regulation, the acceptability by, the OECD standards, the money val reports in terms of anti-money laundering, the Council of Europe's positioning in terms of whether, the quality of the International Finance Center where your structures are placed. So I think it's there's so many issues to cover that now is really the time to speak to specialists in a holistic way. And I think if we can coordinate that together, then that will be ultimately a value add for the family.
Interestingly, we have, I suppose, walked into a fair amount of work because so many of our professional colleagues are now insisting that clients take proper tax advice. And more interestingly, that's really what sort of started off our relationship with Standard Bank. It was really that sort of thinking on some of the US transactions and things like that. But we have carved out a niche for ourselves over the years in that space of these trust structures that Salish was describing. And I understand the whole dynamic, because a lot of money goes into setting up these structures. There are a lot of people involved. And once you've done that and you've been told this is a sort of wonderful, fully functional structure, you want to be able to sit back and relax from that huge spend. But the problem is, as we know, that it's a moving target. And over the years, particularly in the offshore trust space, there have been some quite seismic moves over the years. And this typically comes to light when there's a big trust event. Either they're sort of looking to wind up the trust structure, or they're looking to get substantial amounts out for a UK resident beneficiary. And this is the point at which we then have to carry out sort of quite detailed reviews of the structures, and then sort of use all of the different schemes available to get them back on track and make sure they're compliant again. And of course, that's carried on into the ATED structures that we see. Again, a lot of people not aware of ATED itself, or possibly just not aware of the changes in the limits. So there really is a lot of work in that space, and quite sadly, ignorance is bliss. But the penalties don't go away, and we're seeing clients, when they finally do catch up with things, they're already in a very bad place.
Thank you, Akin. I think one of the things that we see is a safe harbour of investing into UK property over the years. And there's obviously a lot of tax changes that have happened in that period of time. Mo, what are you seeing at your bank? And has that had any effect in terms of structuring for you?
Yeah, I mean, in terms of the question, I mean, Africans tend to have intrinsically a higher demand for returns and are patriotic. So investing in home countries has been something that's happened for some time in terms of real estate treasury bills. In terms of the SDLT charge, has it deterred investors into the UK property market? I don't think it has actually, no, because we've seen lately, especially rising property. The fact is that the UK, in terms of its property rights, the prestigious addresses it has, investment in London and other regions has been strong. I think what we've also seen as well, if we're looking at different asset classes, is other trends taking place. So clients looking at potentially investing in cryptocurrency, into artwork, has also been something that's come to the fore in terms of trends. But real estate markets are always going to remain attractive, particularly in Western markets. Despite Brexit, these jurisdictions are still viewed as safe havens. Clients have their children traveling over, spending a great deal of time from an educational perspective. So those charges have had an effect. The other aspect of it is confidentiality. So despite the new legislation in terms of tax coming in, we've still seen clients who are still willing to pay the ATED charges, for example, to have that confidentiality in place.
I agree, but I think I just slightly will differ a bit because, to a large extent, the UK has been I would almost say a tax haven for many Africans. And I say that from the point of view of, if you aren't resident or domiciled here and you had surplus wealth, the UK was a fantastic destination because you'd use a structure, you didn't pay inheritance tax, there was no capital gains tax. So, if you've sold the property in your lifetime, you reaped all of the reward without paying tax, especially if you use a non-resident company. If you died and used a non-resident company, you reaped all of the reward again. And so, to a large extent, the UK was, I believe, pretty attractive from that point of view. And so a lot of surplus wealth came in. And when I ran my law firm between 1997 and 2013, clients were buying property in multiples. They weren't just buying one property, they were buying, several buy-to-let. They'd buy, if they had 5 children, part of their pension or long-term retirement planning was buying a property per child and saying that, well, eventually it'd be mortgage free and the rental income would pay that child's school fees. And because they didn't see there wasn't any sort of tax exposure. Now, fast forward past 2013, when suddenly the UK government sort of pulled the rug from under their feet, and suddenly inheritance tax and capital gains tax and all of the different taxes that typical UK investors were subject to became something they were subject to. And I think it became less attractive from a point of view of buying it purely for investment. And suddenly also with ATED being the biggest change and the stamp duty changes as well, clients who wanted to de-envelope and move from holding in a structure into their names found it was expensive because of stamp duty. And so suddenly clients thought, actually, this investment is costing me more to service, because clients were not becoming more cash rich, especially the African continent has been subject to its own volatility. So from a point of view of property being the easy sort of destination to put your extra store of wealth, I think Africans have had to look at other destinations and just investing. And also property, one of the disadvantages, it's not as liquid. So especially for clients, say Nigeria or Ghana or East Africa, who suddenly had a need for cash to invest in their business, suddenly realized that selling down that portfolio in the UK had to be sometimes months in waiting. So the UK property market, especially with all the tax issues and and the differences and the way the government sort of changed it overnight, has become less of the obvious destination. It's still interesting. It's still in demand. If you buy in the right place, right address, yes, some prices are staying and holding their value, but the amount of planning and thought that has to go into it sometimes is a headache, for some clients.
I would agree with you as well. I think the easy solution, say 5-10 years ago, was just set up an offshore company, buy UK residential property, and there was your inheritance set up for your children with no CGT on the sale. But there's one element that I think has to still be factored into the UK property market. It's not related to the UK property market, but it's more the dynamics in the individual countries. Is the currency risk is still out there in various countries in Africa, and the safe harbour, which is the other thing and the political risk that's still around. So I think having diversification of assets in other countries is still a play, but I agree with you that it has come down a bit because of all the complexities in now owning UK property, whether you can live in it, whether you can't live in it, what do you do with it? The filing requirements are vast now. So I think it's become more complicated, but it's still a possibility depending on what your individual circumstances are. Salish, agree with that?
Yeah, very much so. I think, in a way, the risk, if you compare our markets, okay, so we got Africa, we also deal in, let's say, South American client base as well. But if you look at the risks compared to Africa, they've still got the same political, economic, currency risk. So it's not just unique problems to Africa. But I think in both territories, the one thing is that the reason why people have assets outside is the safe haven. Okay, it's long-term safety. And in the old days, it was always cash or bricks or mortar because that was easy to understand. We all know land in Africa and it was safe and secure. And yes, people bought apartments and houses. And now, of course, you've had to sort of look at the whole de-enveloping aspect to what people are holding. But over a period of time, we found, and something Mo alluded to earlier, is that a lot of our African families have now diversified a lot of the way they hold their investments, the types of investments, as knowledge has increased, as next generation comes and brings a different perspective to the way you want your long-term assets to grow. So it's not just any longer into a house or an apartment in London, but it's now looking at commercial property opportunities. It could be investing as part of a syndicate in terms of collectives to buy bigger sort of quantum of industrial properties, or it could be a portfolio of properties, a commercially mindset. There are also clients now who are, as Mo alluded to, I mean, we have structures that look after, vintage cars. We have, artwork, wine collections, watches. And if you look at the whole criteria of investment has changed, and the African mindset of families now are much more mainstream in the way they want to diversify those assets. So I think we've seen the next stage of African families developing in terms of the way they engage with their assets outside of the region.
It's very interesting. What I'd like to do now is give you all an opportunity to sort of have a couple of minutes to see where you think the African market is going to go, where is it going to develop, where are the potential pitfalls, and where are the opportunities. Bimpe, can I start with you, please? What do you see the next 12 months, 5 years happening?
I think first and foremost, using technology has been something that the world has come to terms with. And for me personally, it's actually deepened the quality of interaction with clients, because suddenly when you're on a call like we are now with a client, you realize you have their full attention. And even if it's a 15, 20-minute call, the quality of the conversation is so much more focused. And I just think because they're sitting and watching you on a screen and they've made time, and possibly this is taking precedence, but we're all using technology in a very qualitative way. I think also, as far as a wealth manager, and I think any private banker, wealth manager who is interacting with an African family has got to understand the next generation's own perspective. I think the dynamic of the conversation now, a lot more of the younger generation are taking part in the conversation around the family's wealth. Whether or not they're involved in the family business, wherever they live, because they're also sometimes more educated and more exposed than their parents are. And the parents who are actually allowing their children to come and have this discussion with them now are very quickly seeing a change in perspective in the way the advisors are looking after the family. You can't be glib, you can't be casual, because whether it's the client or the next generation, the knowledge has deepened around all the issues we're talking about. I think just the fact that information is much more easy to access online. I have clients coming, I haven't read some article about, and they think they're an expert, but it actually means because they've read an article, I've got to read 3 more to make sure that I can give a balanced opinion about what they're talking about. So technology has changed the way we interact, the way we can service clients. It's meant that the younger generation can come online quicker. And it also means that our services have to be digital. They're going to need to have a digital option, either a way of receiving reports, monitoring whatever it is the trustees are doing. And the younger generation are definitely much, much more demanding. And so those are the spaces. You won't need to travel as much to reach the client. And I think I'm seeing, I help clients run foundations, and we have foundation council meetings now more regularly, because the clients may have a child in Singapore, one in Houston, one in Lagos, and one in London. And we get on a Zoom call and we have a meeting and it's done. Unlike before, we'd have to wait for them to come home at Christmas or something. So I think the way we work, the way we are interacting, the knowledge flow is deeper, and it's going to make for a very interesting future. But we're going to have to be much more aware of the underserved clientele and bring much more value to them because of this knowledge flow.
Thank you, Pippa. That's a great start to the conclusion. Mo, do you want to give your final comments and what your views are?
Absolutely. I mean, I've got tremendous optimism for the future of Africa. I feel it's the final frontier of wealth management. There are some improvements. I'll start off with those, really. There needs to be improvement in political stability, fiscal prudence, tax collection, allocated investment spending. There needs to be a huge investment in infrastructure. But I also think that there's a need for, first world countries and governments to perhaps take slightly less advantage of Africa. And also, again, we haven't mentioned corruption, which again needs to be mitigated. However, that could also apply to the West too. On a more positive note, I mean, if we look at the demographics, young population has been mentioned numerous times, rapid urbanization, an abundance of natural resources, and just the entrepreneurial drive and flair of the countries. I mean, again, some practitioners, perhaps, mainly not practitioners, but some people look at Africa as one country. It's 54 different countries with very different mindsets. So that's an important factor as well. But yeah, I'm very positive about the future of Africa.
Thanks, Mo. Salish, do you want to go next with some comments?
No, I mean, I echo sentiments expressed by both Bimpe and Mo. I mean, a tremendous hope for Africa. It's a great continent, and its young urban population, technology savvy, increasingly plugged into the world. I see, I alluded earlier in terms of your different communities involving in terms of entrepreneurship through startup communities. I see that a great growth for Africa. I think that will produce your next entrepreneur, your next great wealth producers for the region. I'm also seeing, obviously, funds going into Africa. A lot of them are focused on impact initiatives, sustainable initiatives. If you look at the quality of the investors that are now coming into Africa, I think that will add a lot of depth to the corporate governance, both in government, in terms of institutions, and I think the continent will be a lot more in a happier space as a result of that, and you will see great talent come out from the region. You already see that in fields such as the arts. You see that Africa's more confident. It's more confident. We're also setting up structures for African corporates who are now looking to structure to attract international capital money to come into. They're much more confident in terms of looking at international capital markets, raising funds, even dual listings and so forth. So that's something you never saw even 10 years ago. Mm-hmm. And to me, that's great hope. So for me, wealth will continue to increase. It will be more diverse, and Africa, the diaspora itself, will continue to expand. So it's a continent which is our past, present, and future.
It's funny you mentioned about the ethical investing into Africa. Yes. We know certainly in Kenya that's grown dramatically over the last 4 or 5 years, and conscious utilization of assets and land and so on and so forth. I think they've become very conscious of how they treat the continent and how they look after the continent, and not to let outsiders come in and take the minerals and at cheap prices. And they want to look after their own as opposed to letting outsiders come and take their country. Akin, would you like to go next? Or bring the home team home?
Thank you, Rakesh. Some really interesting comments. I mean, from my perspective, I have to say, even though I'm a unrepentant optimist anyway, but I have to say that these are really exciting times for Africa. But I think there is so much going on behind the scenes. This is a lot bigger and far more significant than maybe many people appreciate at the moment. This is largely driven by the way the world is shrinking and changing. And I mean, I know a number of you have mentioned the next generation. They don't see the world at all the way my generation see the world. They see the world as being much smaller. They see everything being within their reach. They don't have these tribal divides that we have, where we talk about all of these different regions. They pretty much see the world and the opportunities. And we're already seeing that play out in Africa through the technology companies, through the media. And so it's really all changing. And for all of these reasons, so, driven partly by the fact that a lot of this next generation has spent so much time in and out of Africa, but also they're so connected. They are so connected to each other that they, even things like compliance and their attitude towards complex compliance, the thought of planning and structures is really not alien to them. And so, as the years go by and things really start to pick up, which I know they will, there's a great opportunity for professionals who operate in that space, providing support to these globally mobile international businesses with assets and business interests in multiple jurisdictions. So really exciting times.
Thank you, Akin. Firstly, thank you for everyone attending. Mo, Sailesh, Bimpe, it's been a thoughtful conversation, some very interesting views, both from a structuring perspective and also then from a kind of aspects of what's happening in Africa, what's going to happen in Africa, and varying views. So thank you again.
Thank you, Graham, for having us. Thank you.
Thank you very much.
Thank
Thanks,
you.
guys.
Thank you.